All right, guys, welcome back to Market Disciple, and thank you for joining me here for another video. And today, in this video, we're going to discuss three things. The first one being big tech stocks, the second, consumer sentiment, and lastly, we're going to discuss what is going to happen, what we can expect for the rest of the week. All right, so before we get into it, guys, I would please ask you to like the video, subscribe to the channel, and it is much appreciated. All right. So we begin with a very, very important week for tech stocks. Very important week. And the stakes are very high for tech stocks. Very high. We've seen that the tech stocks have been getting a lot of have been doing very bad this year. They've been getting crushed this year. All right. And this year has not been good for the market in general, but especially for big tech. So this is a very important week for tech stocks. And you might even say that this week could make or break, right, these companies, or make or break this run that they've had after this major collapse this year of about 30%, right? They recently rebounded, right? But you want to keep seeing that rebound, right? You don't want to see that rebound, that fall at 30%, that rebound, and then you get some bad news this week, and then you have another fall. So hopefully we see that this recent run that they had can continue. All right. So we are now going to look at what consumers are experiencing and what they are feeling, right? We, the consumers, as you know, United States is a consumer society. We are a nation that's predicated and built upon consumerism. All right, our economy is built on consumerism, and one of the biggest companies in the world, if not the biggest company in the world, that employs 20 million people. We're talking about Walmart. Their shares tumbled recently 10%. All right. Why? Walmart has cut back on its profit outlook, and they are now marking down a lot of their inventory because their back rooms are full. They have so much inventory on hand that they have to get rid of it. You know, every day Walmart has trucks coming in, but they're not selling enough. So their shelves are full, their back rooms are backed up, are full. What are they going to do? They have to slash prices, which means that their outlook, their profit outlook, looks bleak, right? It's not going to be what they thought it would be. Why is that happening? Because consumers have been hit hard and continue to be hit hard by inflation, right? Consumers are not buying or not spending their money on the things that they really want. Rather, they're spending their money on the things that they need, like food and fuel. And food and fuel prices have risen so much that there isn't much money left to buy these fun things that we like to buy. You know, even going to fast food restaurants, we see how much it costs, right? It costs so much. To get a McDonald's meal may cost you $15. You know, $15 for a McDonald's meal. That's crazy, uh, right? And that's like, I mean, that's expensive. You know, for the regular average American, right? And you know, again, we're a society based on consumerism, and these are the things that we like to do, and these are the things that keep our economy going when we're spending money. All right. So the last thing that we have today in this video, and we're gonna try to keep this video as short as possible, but we're gonna get through these three things. Is the we have the Fed that's going to decide on the interest rate hike. Most are assuming it's going to be 75 basis points. It's already been priced in, right? So I don't think the Fed likes to surprise. I don't think the Fed likes to shock and surprise the market. So I think they're going to go with 75 basis points. Some believe that it will be 100 basis points, but that's going to be a major problem if it is, because that's not what we expect, right? That's not what the markets expect. And if it's 50 basis points, that's going to be another problem because, again, the markets don't expect it. 50 points is too soft, it's too dovish, and 100 points is too hawkish. 75 points is a good number. It's a moderate number for what we're experiencing right now. And I believe that's what the Fed is going to go with that rate. And with that, guys, again, if you're here with me right now, I would ask you to like the video, uh, give me any comments that you have, any feedback in the comment section below. I really appreciate it. Like and subscribe to the video. See you again next time. Peace.